Hello everyone, welcome to the market opening bell on Wednesday, May 7th. The Hong Kong stock market rose on Tuesday. The Hang Seng Index opened 71 points higher, dipped 55 points to 22,449 earlier on, then rebounded, peaking at 22,747 with a gain of 242 points. It closed up 158 points or 0.7% at 22,662. The H-share index rose 30 points or 0.4% to 8,261, while the Hang Seng Tech Index fell 4 points or 0.09% to 5,239. Total market turnover was 213.3 billion Hong Kong dollars. Southbound funds net bought 13.475 billion Hong Kong dollars in Hong Kong stocks, including net purchases Tracker Fund $4.55 billion, Meituan $3.456 billion, Hang Seng China Enterprise Index ETF 2.311 billion Hong Kong dollars, Alibaba $1.503 billion, China Construction Bank 524 million. Net sales Xiaomi 491 million, CSPC Pharma 458 million, Tencent 362 million, Sinopec 309 million, SMIC 266 million. Southbound funds have net bought Meituan for 7 consecutive days, totaling 8.434 billion Hong Kong dollars. Shanghai and Shenzhen markets opened and closed higher, marking a strong start to May. The Shenzhen Composite Index surpassed 3,300, closing at 3,316, up 37 points or 1.1%. The Shenzhen Component Index rose 183 points or 1.8% to 10,082. Combined turnover was 1.336 trillion yuan, up 166.9 billion yuan from the previous day. After the offshore yuan rose nearly 1% during the mainland's May Day holiday, the PBOC slightly raised the yuan's central parity rate by 6 pips to 7.2008 against the US dollar, a 1-month high. The offshore yuan briefly broke the 7.2 level, first since November last year, hitting a 6-month high. The yuan's recent surge is driven by a weaker US dollar and domestic economic stabilization policies. Technical analysis, the Hang Seng Index hit the 0.618 Fibonacci retracement target of 22,730 and through the April 7 gap between 22,638 and 21,048. The 9-day RSI rose from 62.6 to 65.2. The next key level is the 50-day moving average, which lies at 22,804. A breakout above this with consolidation could target 23,000, then 23,400, with support at 22,200. Mainland tea brand Auntie Jenny saw strong IPO demand, with margin subscriptions exceeding 94 billion Hong Kong dollars, oversubscribed 3,446 times. It will list on the Hong Kong EX tomorrow. From 4 p.m. to 4:30 p.m. today, will live stream its grey market trading performance in Phillip Mart. Among listed tea beverage stocks in Hong Kong and the US-listed Cha-Ji, Michelle Group Miche Group leads in scale, profitability, market penetration, and capital market performance. As of January 2025, Miche operates 46,479 stores across China's Tier 1 and Tier 2 cities, lower tier markets, Southeast Asia, and Australia, far surpassing competitors' thousands of stores. Its scale ensures strong market penetration and brand influence. Miche's low price, high quality strategy, average product price between 4 to 10 yuan, targets Tier 3 and Tier 4 cities and rural areas while expanding overseas, particularly in Southeast Asia. In 2024, Miche reported 24.8 billion yuan in revenue and 4.45 billion yuan in net profit with an 18% profit margin, driven by its integrated supply chain. R&D, production, logistics, and centralized procurement to support low prices. US President Trump and Canadian Prime Minister Carney rejected promises of an imminent trade deal, while India preemptively secured a trade agreement with the UK, raising concerns about US trade negotiation setbacks. Investors awaited Fed meeting outcomes, leading to a US market decline on Tuesday. The Dow fell 389 points or 0.85% to 40,829 after dropping 459 points to 40,759. The S&P 500 fell 43 points or 0.8% to 5,606 after hitting 5,586. The Nasdaq dropped 154 points or 0.9% to 17,689 after reaching 17,592. The China-focused Golden Dragon Index rose 30 points or 0.4% to 7,200. Trump hinted at unprecedented news before his Middle East trip next week, briefly fueling hopes of trade progress and partially recovering market losses. However, he later clarified the announcement may not relate to trade, dampening optimism. On US-China relations, Trump claimed the US would lose little without Chinese trade, asserting China's economy is suffering without US trade and that tariffs would reverse the US-China trade deficit. Most of the Magnificent Seven tech stocks fell. Tesla dropped 1.8% after April new car sales in the UK and Germany hit the two-year low. Meta fell 2%, Apple 0.19%, Alphabet 0.6%, Microsoft 0.7%, and Amazon 0.7%. On economic data, the US March trade deficit widened to a record $140.5 billion US dollars, up from $123.2 billion in February, exceeding forecasts of $137 billion. Imports surged 4.4% to a record $419 billion, driven by anticipated April tariffs, with increased purchases of pharmaceuticals, passenger cars, and computer accessories. Exports grew only 0.2% to 278.5 billion US dollars, with agricultural products like soybeans, corn, and beef hit hardest. After the US market closed, stock index futures rose following reports that US Treasury Secretary Bessent will meet with Chinese Vice Premier He Lifeng later this week in Switzerland. Our stock pick today is XD Xindong, stock code 2400. XD's three new self-developed games, Go-Go Muffin, Sword of Convalaria, and Heartopia, have successfully launched in multiple global markets, becoming new revenue sources. Additionally, the release of Heartopia was closely collaborated with TapTap, bringing a significant number of new users and broader brand recognition to the platform. As of December 31st, 2024, the group's game portfolio includes 21 online games and 35 paid games. In 2024, the average monthly active users (MAU) for the group's online games increased by 14.5% year-on-year, while the average monthly paying users grew by 23.1% year-on-year, primarily driven by the user growth from the three newly launched games. The TapTap China app recorded an average MAU of 44 million in 2024, up 23% year-on-year, mainly due to the launch of several highly popular mobile games in the Chinese market, some of which secured exclusive or in-depth partnerships with TapTap. However, the TapTap International app's average MAU was 5 million in 2024, down 13% year-on-year, largely due to a significant drop in users from India caused by certain popular games and a substantial reduction in overseas marketing investments to control costs. For the year ending December 31st, 2024, the group achieved revenue of 5.012 billion yuan, a 47.9% increase Game business revenue rose 64.2% to 3.434 billion yuan, accounting for 68.5% of total revenue, while TapTap platform revenue grew 21.6% to 1.578 billion yuan, representing 31.5% of total revenue. Net profit attributable to shareholders was 811 million yuan, compared to a net loss of 83 million yuan in 2023. The overall gross margin was 69.4% higher than in 2023, primarily due to increased revenue from self-developed games, which typically have higher margins than licensed games, improving the game segment's gross margin from 46.7% in 2023 to 62.6% in 2024. Looking ahead to 2025, the group plans to launch mobile game products such as Totally Accurate Battle Simulator, Dave the Diver, and Volcano Princess, while expanding its product offerings in domestic and international markets across multiple platforms to provide users with richer gaming experiences. Recommendation: buy at 37 Hong Kong dollars. Target $40. Stop loss at $35. I do not hold the above stock.